Hey folks, welcome to Pro Trader Strategies Market Commentary for Thursday the 17th. We're an educational company here at Pro Trader Strategies, and what we're trying to do here is to teach you guys option strategies that you can implement around any portfolio at any given time. So please make sure you guys mark your calendars. Today I'm a little bit late. I got a little bit carried away with today's webinar. I'm preparing for our bearish risk reversal webinar, folks. So sorry, I got a little ahead of myself and got all tied up with that. So, hey, hit subscribe, because days like today when I mess up and maybe miss the mark on that, you guys will get notifications. So if you're new, please hit that subscribe button. Also smash that like button. It really does help us out. And finally, comment over there at the bottom. As we are an educational company, I want to make sure you guys are clear of concepts. So if you have any questions, comments, or anything else, I'm going to reply to that throughout these webinars. And or if you're watching it on tape delay, then I'll come back and circle back around for you. All right, in this video, we're going to talk about the economic data, geopolitical environment, and the overall markets. Finally, we'll round it off with talking about my option strategies I found based on those assumptions we come up with. And I'm Eric Wilkinson. You may recognize me from mainstream media where I talk about all of those things. Moving forward, a couple of things to talk about here is I've got to try and shut this thing off. Sorry, we don't want to hear that.
Steve Kovac is live outside the Chelsea store, which opened.
We got CNBC live on there. So here, I'll shut this thing down here for a second, and we'll finally get on with our show here. All right, economic data. Across the pond, really, what we're looking for these days is, well, yesterday we had the FOMC really talking like, all right, we've gotten this talking about the taper tantrum behind us. So since that's behind us, we are now going to be moving forward with when is this really going to start coming in line with the actual tapering of the asset purchases that the FOMC is going to be doing. When is that going to happen? Well, it's going to happen most likely November of next year. That's what actually the Fed fund futures are pricing in. Then here in the United States, let's talk about our economic data, because we got all kinds of stuff here in the United States. We got the Philly Fed, one of the first Fed numbers that we've seen on these manufacturings coming above what was expected. It came in at 30.7, expected to be 30.3. So good to see there. Unfortunately, unemployment claims higher than expected at 412,000, expected to be 350,000. Then we got the CB leading economic indicator, index, that came in line with expectations at 1.3%. So nothing really to see there. And then finally, we've got the natural gas storage as a build of only 16 billion cubic feet, expected to be a build of 71 billion cubic feet. Obviously, that is less build than what was expected. That means there is less supply, all right, could be driving prices higher. We're not really seeing that in crude oil because we got a couple things going on here. We've seen gold really fall out of bed recently as we're seeing the dollar strengthening. All right, inflation's still there. Well, another thing with crude oil is it's had a massive run, folks. It is a little overdone. These are 52-week highs. We haven't seen these prices in about 5 years or so. So I think that it's just kind of getting a little overdone. I don't think people are really out in force driving around in the United States as much as what the price of this crude oil is really starting to indicate here. There we go. I got my thing over there. So you guys should be able to see that. Please comment over there on the side. We've got a topping pattern here. So I am looking at bearish opportunities in the Marathon Oil, ConocoPhillips, COP, MRO, those two names I'm looking for, XOP even. So those are some names that I'm looking to add some bearish deltas with, because crude oil finally starting to show some kinks in the armor, and it looks like we are looking to want to start to move to the downside here. And I'm going to be looking to add some negative deltas with the crude oil sector here. I don't know which underlying I'm going to be looking at as of right now, but I do have a couple of things here. I have XOM, XOP, and COP on there. So looking for that for a bearish move. All right, Bitcoin, we are pretty much unchanged for the day, but look at this is what I'm talking about with gold, the inflation trade out the window. It looks like the strength in the dollar really holding on here, but I am really surprised that we have fallen this far, this fast in gold, breaking out of that 1800 area. I mean, it was short-lived when we were testing that 1900. We got the value area to shift higher. That's acceptance of value higher. And as soon as that happened, they broke the tradition of what we normally see here and have broken to the downside. Usually when we see value areas move higher, that means acceptance of value is higher. We see a migration that way. That's not the case here at all in gold futures. It has completely shifted and gone below that 50-day simple moving average yesterday, continuing that weakness today. Gold miners could be something to look at. GDX, GDXJ, they usually are the laggers. Now, you guys always hear me. Trade the leading indicator, folks. Why? Because don't trade the leading indicator. Don't get me wrong there. Don't trade the leading indicator. Trade the laggers. The gold is going to be the leader. So GDX, which is the gold miners, and the GDXJ, which is the junior gold miner ETFs, those are laggers, and they could start to see that market start to follow suit here relatively shortly. Bonds making a blast to the upside. Yesterday, they were kind of fading. Powell's talk about not raising interest rates. Well, today, economic data, everything else around the world, people starting to see some hot spots with COVID, really driving this market higher. People finally starting to believe the Fed probably isn't raising interest rates. And then VIX, going to start seeing some strength in the VIX here because I think we're seeing some acceleration to the downside here in equities after yesterday. We've got the Dow Jones Industrial Average settling below the 50-day simple moving average and our 138 Fibonacci extension, both of those things being very bearish. Looks like we are going to start rolling over here. Those blue chips, that's where we're seeing that sector rotation again and back into the tech sector, maybe because we're starting to see some of these hot spots happening. And obviously, we saw pretty good economic data and finally started seeing good forward guidance out of most of these guys. So seeing some movement there with the tech sector, whereas even the S&Ps, they really don't know what to do as of right now. Overnight inventory, we got really short, but today, coming into the day, you can see we flushed them out. That is usually a pretty good sign that we are going to resume to the downside. You flush those guys out, resume a little bit. So I would say risk is closer to being negative than positive at this point in time, but it just feels like this market is stuck in a rut at this point. Another one for a bearish opportunity. If you guys ever wanted to short something, we are talking about how you can take advantage of a bearish assumption and short these underlyings with a little less risk than what you would have to have put up if you went out there, borrowed the stock to get it short. You're going to have to pay maintenance margins, all kinds of crazy stuff. It is just a headache to short. That's why so many people don't do it. Well, can you do it with an option strategy and limit your risk a little bit? I'm going to show you how we can do that with options in today's webinar, so please check that out. I will drill down on all these details, when we're buying, when we're selling. Do we want to collect a credit? Do we want to do this for a debit? Why are we doing all of these things and following these rules? Well, it's to make it mechanical for you folks so that you aren't second guessing yourself. When you are trading, and if you ever second guess yourself, that's where things start going wrong. What we are trying to do here at Pro Trader Strategies is educate you on all of the levers and pulleys with options so that when you set these up, you know that you've done it with the most optimal way that we can find. All right. And I'll show you how to do all of that stuff. We're going to talk about deltas and stuff like that. Don't get scared away. I'm going to show you easy ways to remember all of the Greeks and how these option strategies can increase your probabilities of success. So please check those webinars out at protraderstrategies.com. Also, don't forget to subscribe so that you guys can get some access to these immediately, especially when I screw up on days like today. I'm sorry, folks. I did get tunnel vision on today's webinar. And also, don't forget to comment over there if you have any questions. I mean, even if it's 2-3 days after this video is released, I'm checking these comment sections to make sure that I can make sure you guys are all clear on concept. And finally, Smash that or take that. Bye for now and take it easy.